everybody. Welcome to your, I don't even know what day it is. It's Tuesday? Tuesday edition of the Trader Merlin Show. Hope you had a great session out there. It was not a good one for me. I got some losing positions on. At least I'm underwater a little bit on some of my options trades. We'll walk you through that one as we progress here today. But lots to talk about, especially what's going on with China. Yesterday we did a thing about the EU deal, which that looks nice and rosy and everything getting better. And all of a sudden, you know, I mentioned we still got three major pieces left. China is, in my opinion, number one, even though it's not our largest trade partner. It's really Canada and Mexico. But China is just such an important part in what we buy and sell. So to me, that's your big story. So I have a couple questions that came in on that. I'll start off with our title slide here, which is China trade problems. What kind of problems, pray tell, are we seeing one myself? Hopefully it, not sure why it's spinning. Everything is great on my end. Okay, that is very bizarre. It's saying my current bitrate stream is 129.7 and that they recommend a bitrate of 6,800. Okay, so something's going on with my bitrate. I will, I don't think it's YouTube. I really don't think it's YouTube, Lisa, but I've trust me, I've dialed in almost everything on this computer trying to make it as good as I can. And every now and again, I see the spinning wheel pop up and it kind of, there, yeah. I'm just going to blame YouTube. It's YouTube's fault, never me. Yeah, it's kind of like my previous relationship. It's all my fault. It's not never YouTube. So anyway, we'll move forward from there. So the big challenge for all of us is how powerful and dangerous this issue with China is, because most countries can't fight back. They can't come after the U.S. and say, oh yeah, well screw you, we're going to jack your tariffs up, 150%. China can. Right? China has tons of other trade partners. They certainly would hurt their economy, but it wouldn't be that detrimental. Whereas for us, we need a lot of the stuff that comes from China, our cheap goods and services. So it could be a big, I guess, a big problem going forward. So Oliver's here. I'm just going to say that right now, this might be a little bit of a turning point for our equity markets. Now, I know I've got way too many lines on my screen here, so let me get rid of some of this stuff so it just doesn't look as bad. There's your August 1st deadline, which is not really that relevant anymore. Let's get rid of that line. I'm going to get rid of the yellow box too. Let's just get rid of it all. So the trend still looks great. From a technical perspective, though, what we had was that dark cloud cover. It did come to fruition today, which does foreshadow more downside movement. If you are someone who's a practitioner of Japanese candlesticks, it does look like these equity markets will be selling off over the last couple of days, particularly when you look at the NASDAQ. Oh, I'll tell you, I looked at the NASDAQ today and I was like, oh man, I like the way that it finished. You got the shooting star, just a nice shooting star. You got volume a little bit higher than normal. Even though we're on a powerful uptrend, I will be looking for shorts tomorrow. So hopefully I can, recoup some of the losses I had today on this NASDAQ 100. We'll see. It's tough to go against that Magnificent Seven. It really is. But if this trade war issue gets worse, I think you'll start to see some issues for this Magnificent Seven, particularly the NASDAQ. So my assumption is that tomorrow we will see a sell-off in the NASDAQ. So right now you're looking at a low point today of the NASDAQ of 23,421 for the NASDAQ 100. And if we can get below that number tomorrow morning after the opening bell, not in the after-hour session, right? So not between now and 6:30 a.m. Pacific, but tomorrow morning, if we open up above 23,421 and start to drop below it, I think you've got a great shorting opportunity on the table. Now, of course, there was talks going on in various parts of the world, including Sweden, and they just have not come to an agreement. Now, remember, we've had a 90-day hiatus, a 90-day pause on these tariffs, because remember, Trump said 145% tariff for you, and look, right now, there's concern whether it goes back to 30. Do we see Trump extend this 90-day pause, which is supposed to end on August 12th. So August 12th is kind of that deadline that we have, so just a couple of weeks away, that if we don't get some agreement, I do see Trump going off his rocker again and saying it shouldn't have, should I do it in Trump's voice? This really shouldn't have taken 90 days. I would have had this done in like 5 days or less, so I'm going to give you 1 week extension, no 90 days, 1 week, and if you don't have it, 200% tariffs on everything from China, right? He could very easily say something like that and get frustrated about it. Of course, he wants to ink the deal so he can put a feather in his cap and move on. Yeah, so for most, it's the August 1st, Lisa. For most people, it's August 1st. August 12th is for China specifically. So that now is, they're expecting that to get pushed down the road. In the interviews I saw today with Scott Bessent was saying, look, we're not really in the mood to extend it at all. Should happen by August 12th. But that ultimately is going to be up to President Trump to see if that happens. So I don't expect it really to be that tumultuous this week. But as we get close to that deadline, you could see the kind of typical shock and awe that Trump loves to do be pulled out, and that could cause a little bit of a jar for these markets. And just some of the things are setting up for a bit more downside. It's not looking good. So let me read a question here that came in from John. He says, in your opinion, what would happen if no trade deal is reached with China this week? Well, I don't think much will happen this week. I think they had a 2-day meeting, and now that's pretty much done. That 2-day meeting is over, and there was nothing that happened out of that. The president and Xi Jinping haven't even sat down together and really hashed this out. Really, I think that's what should happen, is those two get together and just knock it all out in one say, as opposed to having the trade representatives meet and discuss all this stuff. So really, John, I think what you'll see, if there is nothing that transpires from these meetings that have happened the last couple of weeks and couple of days, that most likely what you'll see is the market slowly drift lower, because a lack of clarity, a lack of conclusion leads to more uncertainty. And that might lead Jerome Powell to keep rates right where they're at. If China reached a trade deal today, we'd probably see a rate cut on Thursday or on Wednesday. But I doubt that's going to happen, right? Powell needs to remove as many variables off the table of uncertainty as possible before he starts to cut, raise, or do anything with rates, right? Keeping it the same is the prudent thing to do. And China, we've got no. I'm not sure why that happened. Let me see here real quick. I don't know if I can switch the internet provider. Oh, I see. I know what happened. Let me see if I can do this. Could be dangerous. I'm switching fiber optic. This should be a little bit better here. Now I'm connected, and hopefully we have a secure connection, and this should fix the problem. So my apologies for everybody out there for that spinning wheel. We should be back now, and I'm just checking the speed here. I switched over to a different internet. Big app, it doesn't suck at everything. It's just my internet, and right now the internet speed is unbelievably slow. I will tell you right now, it's incredibly slow. So something happened in my area that caused my internet to just get really, really, really slow. So my apologies. You're probably going to get more spinning wheels here as we go today. Crazy. I've only have 40K upload and download right now. Hey, Giselle, good to see you. Good to see you. Okay, so, yeah, well, it's weird because I'm running a much slower connection than normal, and it's actually doing better than I was with the other one. Crazy. So, John, I don't think anything really that dramatic this week. I just think that there is some negative headwinds. And let's start off with some of those negative headwinds and talk about economic data. So let's go over here to your Forex Factory. With regards to economic data, I'll tell you, I'm not feeling really good about this. And granted, it's only 1 day's worth of data, but let's look at the important stuff. You can see right here, you had HPI data, that's home price index. Now, if you want to know exactly all these different reports, this is the change in the purchase price of homes with mortgages backed by Fannie Mae and Freddie Mac. So are prices going up? Are they going down? And you'll notice when I bring up the table here that the prices of homes purchased with Fannie Mae and Freddie Mac have been drifting lower and lower and lower. This is really not a good thing, right? That means that anybody who's fixing and flipping and trying to turn a profit on those real quick, your profit margins are sinking, and that could potentially lead people to go into foreclosure because you want to flip a house and sell it for more than you bought it for. That certainly is a problem there. Also, homeowners, you have less equity in your home because prices are getting lower and lower and lower. So that to me is not a good sign from an economic perspective, and that's just the HPI data. Now, if we look at the S&P Case-Shiller Composite 20 Home Price Index, that represents 20 major metropolitan areas of the United States. Now, I know we have realtors in the room. So my realtors in the room, you guys have the data. I always speculate. I think I know the number, but I'm not going to say it. I'm going to let you guys tell me, over the course of last, 20, 30 years, what is the average annual price appreciation for real estate? Not just this year, but average, right? You use that as a basis for an investment decision on real estate. For example, I know that 8 to 10% is the S&P. Therefore, if I'm getting 5% rate of return, that's not good. If I'm getting 12% rate of return, I'm beating the market. So with my realtors, you put 12K. No. It's got to be a percentage. The number that I heard was it's about 5 to 5.5% per year for real estate growth over time. Now, Rob says 10%. Okay, I don't know which one to believe, but from the numbers I remember hearing was like 5 to 5.5%. But I'm sure we have realtors in the room that might know better than that. I'm not a realtor, but I own properties. ROI estimate. Okay. Yeah. I think 5% was one I've heard over and over again, but I just want to let the pros. Over the long haul, meaning you're talking 30, 40 years, Gilbert. Because remember, you have periods where prices go up and down. Included in that calculation would be obviously the big sell-offs we had in 2008 from the financial crisis and bubble there. But let's just assume you're getting 5% annual appreciation, right? Maybe just for sake of argument, we'll just use 5. If that's the case, look at the S&P Case-Shiller Composite 20 Home Price Index right now is at 2.8. Thank you, Big Eb. It says AI says 6.3 over the last 20 years. Perfect. We'll use 6.3. Big Eb, my research assistant today. So if you look at 2.8, we are drifting lower. You guys, I'm a fan of the trend, and you can see that since May of 2024, we've been making lower lows and lower highs, and that trend seems pretty pronounced, and we were worse than expected today. It was expected to go from 3.4% annual year-over-year growth to 2.9%, and we came in at 2.8%. So that's really not that great for anyone looking at economic growth. Remember, a good part of consumption is driven by people who have more and more equity in their homes. A lot of people will pull out loans against their home and go buy stuff. That's consumption that drives the economy. As those values decline, you're probably not going to be able to pull out as much money. And depending on how quickly it declines, it may put people underwater and therefore maybe need to start to sell their home. Now, granted, I think we're a long ways away from that, but that type of setup does, I think, put pressure on economic growth just because there's less money to pull out of homes. So that's not a good piece. And look at the JOLTS job openings. Where's Oliver? He's going to call me the doom and gloom guy. You look at the JOLTS job openings, we've been drifting lower and lower and lower. And that trend is very pronounced since 2022, right? There's no mistaking what that trend looks like. And it almost felt like we kind of stabilized here the last 3 months. The previous reading was 7.71 million new jobs created, job openings in the U.S. Expectation was that was going to drop by 200,000. We're going to see 200,000 less jobs than we did before. It actually came out at 7.44. So worse than expected. That's 270,000 jobs that have just somewhat disappeared according to JOLTS job openings. And that trend is definitely something that could become problematic for the markets. Now, again, this is a double-edged sword because it looks like jobs are declining, but maybe that's just because more people have taken jobs and removed those from the market. So that doesn't look like a good piece of data there. Consumer confidence, I don't pay any attention to that number. So from the 3 pieces of economic data we looked at already, HPI, Case-Shiller Composite 20 Home Price Index, and JOLTS job openings, doesn't look that great right now. And again, that's 1 day's worth of data. We've got a lot more coming out tomorrow. And then certainly for the rest of the week, there's some great pieces of data, including GDP, core PCE price index. So we'll have to wait and see how it all transpires. But for right now, from an economic data perspective, things are not looking great. Now, why is that so important? Well, it's important because tomorrow, actually, I'm not doing a show for 2 days, guys. I mentioned I'm not going to do a show on Wednesday, but there is a memorial service and funeral for Arthur Evans up in Long Beach tomorrow, and I will be attending that one. Unfortunately, I'm going to miss 2 days in a row. But I will promise I will be here Friday. We'll make up for it. Maybe I'll just take a shot with you on Friday just to kind of catch up on things. But yeah, no show Wednesday or Thursday, which sucks because there's some really good economic data happening over the next couple days, which I will disclose with you here in just a minute. So let's go into more data. Earnings season so far looks great. I think earnings has been a good driver of this market as it continues to break through all-time highs. Yet today, I think we saw a little bit of negativity out there. And you look at some big names that reported earnings today, 2-hour show on Friday. I can tell you, Steve, that I'm going to be so ready to go out and party this weekend. I need a break. I need to just let go. Here's UPS. So if you look at UPS, they missed earnings pretty badly. They were expected to make $1.56 per share. They came out at $1.55. They missed by a penny, but it was their forecast going forward that really crushed them. Not only do you have climactic volume on this, but I mean it rocked the price of UPS all the way back down to the lows we saw back in April of this year. Now let me put this on, see if I can zoom it out just a little bit more to see where those next levels are. I mean, that really paints it paints an interesting picture for UPS because it peaked out in February of 2022 at a high price right around $232, and right now you're at $90 in the after-hours session. So not good for UPS. I was actually looking at potentially, it's taking a long time to show over there, Luis. I was thinking about going a little bit proactive here and being aggressive and selling some puts on UPS, but I just didn't get the numbers that I wanted, and I did not make trades on really anything today. I didn't see anything that tickled my fancy, if you will. But yeah, you had UPS getting absolutely crushed today. Novo Nordisk as well was down 21% today. It's actually well below its nice little areas of demand, which I thought we might stop out at right around $57, and just keep on going lower. Right now, the next major stopping point I see is right around $48. Now it's up a little bit in the after-hour session, but yeah, Novo Nordisk getting absolutely clobbered today. You had Spotify. I do a lot of presentations where I talk about the evolution of technology, and this is such an amazing innovator in technology, right? They've taken what you and I used to collect, vinyl, records, cassettes, 8-tracks, we had all this physical stuff, and now you're looking at at just basically streaming everything from books to podcasts, and yeah, it's pharma. Down today 11.55%. It's still at $620, but again, it has to do with the float. There's just not that many shares outstanding. This is another one that I'm like, do I try to pick up some Spotify? But I think I'm going to wait. I think, again, I do think that we're going to see the market just have a little bit of a breather here and start to sell off after this monumental run of higher highs and higher highs and higher highs. Oh, man, it was just, just crazy. So that's another one that didn't, Brown & Brown was another one that got just beat up today, down 10.4% for Brown & Brown. And it is past any area of demand that I'd be interested in buying at. It's actually right just past it. I was looking at 93 on this one. So, yeah, not a lot of stuff that I want to buy here. I'm not going to catch these falling knives. Well, let me go back to the camera here. But, typically, if I'm looking at catching a falling knife, it has to be in an area of demand, and that demand zone should be pretty strong. In that example there of Brown & Brown, it's already past the strong demand zone that I'd be focusing on. It's already past it, so there's no point, and I could take a gamble on it, going, all right, we'll go to Brown & Brown or Spotify or UPS and, take a flyer, but I've got two things working against me. Number one, most of them are past their strong areas of demand, and number two, it feels like the market's setting up for a little bit of a sell-off due to uncertainty because of global macro events, including the China. So I'm kind of just going to hold off a little bit here, maybe until next week, and see what these trades, what they do, right? How do they transpire? Are they going to keep going lower? I mean, obviously UPS, I'm probably fine with that one long haul. UPS is just an integrated part of America. It's hard to see that one go away. I saw a question here about CMG, talking Chipotle. And, you kind of expect there to be a bounce. I actually drew this line here, which is the dead low for the past couple of years. That low price on April 7th was $44.46. And we have just tiptoed just slightly below that right now. So I still have not sold anything on CMG, haven't picked up any either. Chart just looks really, really bad. If there is a bounce, this is where it's going to happen. If not, you're going to see probably a more significant downside move. I don't know if we get to 36. That'd be a long, long fall if we got to 36. But not looking good. And, this is one area of play that I like to do. I like to look for things that are clobbered and have pain and anguish from the part of the people that are holding those shares. And then I like to step in there and buy some of it up, or at least sell some puts, collect a bunch of premium because most people are trying to buy puts. So I will be selling those puts at an elevated premium. I just didn't see anything that I really liked today. And again, I do think that the market's going to drift lower. Steve says the CMG premium stink. Exactly. One of the benchmarks I'm using is I want 1% a week. And so I can get 1% per week on CMG, but I have to go too close to the current price. I like to go out of the money a little bit of ways. I like to let it fall. Right, I'm really trying to, it sounds so bad, but I'm really trying to just capitalize on people's panicking. The more they panic, the better. The more they panic, the more likely you're going to see massive premiums on your position. So on those earnings sides of things, it was not looking good today. I'll bring up an earnings list so we can just kind of see some of the bigger names out here. Some did beat, but a lot of them had lowered forecasts and expectations. For example, these are some other big names. Boeing. Boeing actually beat earnings, but look at their earnings. They were estimated to lose $1.54 a share, and they only lost $1.24. It's like, oh, wow, you guys beat earnings. No, you still suck. You're still losing significant amounts of money. Now, Visa, on the other hand, was expected to make $2.86. They came out at $2.98, so that was great. Still down almost 3%. United Health Group, this is one that has very good premium. They missed earnings by quite a bit. They're supposed to make $4.84. They came out at $4.08. And remember, that's after a lowered target expectation for earnings as well, and they were down 7.46% today. Look at UNH, which is one that I have been trading quite a bit lately, and the 300 mark was an area where I liked it at, but luckily my options last week expired worthless at that 275 mark. So that was one I looked at today. I just don't know if I didn't want to push it. You know, this thing has got 2 federal investigations. They missed on their earnings. I could see that there's a bigger sell-off here happening on UNH. So I'm going to sidestep this one for just a minute and maybe jump back in later on down the road. You know, if you look off to the left of the chart here, though, I got a long way to go before I find any sort of price that looks appealing. Like 180, down to the 180s. 2.4% premium today on UNH. September 5th puts. September 5th? You're going to September 5th, man. You're giving a long time. I couldn't go out that far, Big Eb. That's bold of you to go to September 5th. Let me just put a line here. There's your September 5th. I don't know, man. That's a long window of time right there. And you mentioned, what'd you say, 250s? I'll put that line on the screen here so we can, I'll put the line on the screen so we can see that bad boy. So there it is. There's your 250. You're almost there, and it's not even September. I don't know. I'm not. That's too aggressive for me. That's way too aggressive. Right now, the options chains aren't showing really consistent data here, but let's just really quickly. Yeah, for me, Big Eb, and again, this is the beauty of trading, right? Because some traders like to go a little bit longer term. I like to go short. When I'm doing weekly or my wheel strategy, I'm trying to do shorter term with single company names. So if I'm doing United Health Group, I'm not really going to want to go past a week. For my other account where I'm trying to go for 1% per month, I'm using ETFs like SPY and QQQ, all the major liquid ETFs, and I'm doing those for 30 days. But 30 days is pretty much the maximum I will go out. So if we look at the chain here, I know the numbers won't be that great, but let's go out to, as you said, September 5th. And this is IBIT, which I don't know how to do IBIT. Let's go to UNH. So he said the 250s. Right now, the 250s are getting you $5. I'm still not okay with that. 5 weeks, 2% rate of return. I'm not good with that. What about next Friday? Right? So I can go out and show your 250s. I can do the 252s and a half and go out literally 9 days and get 1%. So 9 days I can get 1%, or I got to wait 5 weeks and get 2%. I'm going way shorter because the time value is precious to me. The shorter time that there's on that option, the less I give it to wiggle, the less I give time to move. So for me, yeah, Margaret, right now I think I would avoid UNH as well. The 2 federal lawsuits are not good for it, and the fact they just missed the earnings, even though it's a lowered earnings number, the premium is so juicy, but no, I just can't go that far out. But again, we're all traders, right? We all do things different ways. Having talked to the Big Eb, he's got a little more time. He wants a little more space. Cool. Go for it. Steve, you own Big UNH? Oh, man, it's got to be a painful one today. Cut it very short. Thanks, Matt. I want to own UNH, I think 350, 400 within a year. Not that I disagree with you on that one. Oh, might be a bet. I'm always down for a bet, buddy. I'm always down for a bet. Looking at that, Big Eb pointed out a number there that you said 350 to 400. Let me make sure I read those numbers correctly. Yeah, 350 to 400. So let's put a 350 mark on here. Do we think it's going to get there, in the next 3-4 months? It could. There's no argument that it could get there. The challenge, in my opinion, is going to be what will it take to get there? So 2 things have to happen. Number 1, you have to remove the uncertainty from these 2 federal investigations. One's the Department of Justice, and the other one, I can't remember off the top of my head. But there's 2 federal investigations going on with regards to United Health. That's bad. In the limited experience I have working with a company that had federal investigation, they're brutal. They're not a normal lawsuit. It's, the federal government has infinite money that, you and I are funding it, but they can just keep on fighting, and they just drain a company until you settle. So my guess is that United Health would probably just settle those lawsuits at some nice valuation. Once that number is determined, we can see how bad that impacts the bottom line when they take those one-time charges. You clear that, and yeah, I think the runway is definitely much better for more upside here. But the trend is your friend until the bend at the end, right, Big Eb? And that trend is looking pretty bad right now. So, we're talking about catching a falling knife that's falling aggressively, and I think that I would probably step away from that. At least be careful and not jump into it right now. Lisa says all healthcare is not doing so good. Certainly, there's some issues with healthcare. Kennedy's not really helping out too much in that case. However, are you and I going to use less healthcare? The reality is no. And the older we get, we're most likely going to be using more and more healthcare. So even though healthcare is not doing good, companies like United Health are not going anywhere. United Health is a too big to fail type of company. So I'm with Big Eb. I do think that there'll be a balance. It's timing it that's the problem, right? We've mentioned this many times that if there was a cemetery for traders, it would be full of traders who were 100% correct, just a little too early. So one thing that in the conversations I've had with several of you is if you are looking at something like UNH and saying, hey, if it gets to 250, I'm good with that. I'll hold it, and I can afford to hold it for a long time. Then that's fine. What I would do is I would be selling calls against it, maybe just taking a little bit of extra premium on a weekly basis, and I wouldn't put it anywhere close to the current strike. Right? If I'm exercised at 250, I might be trying to sell the weekly 280s, 290s, just way out of the money, just to see if I can catch an extra 0.25% premium per week on that position until it gets back up to the price that I'm interested in. So UNH had some of the biggest bullish option flows today. Did it? I didn't see that at all. So yeah, that one's a bit dangerous. That was a pretty big piece for today was UNH. And then what else do we have? The only other trade. So I have the 285 strikes on MicroStrategy expiring this Friday. And that was a more than 1% trade for the week. But boy, it's really fallen pretty aggressive. I could be in some MicroStrategy here, some more MicroStrategy because I'm long MicroStrategy right now. I could be in some more by the end of this week if it continues to fall like this. Now, that said, let's go back and look at our markets overall. So the 10-year had a pretty aggressive drop today. That's good news for the housing market. I would say good news for the equity markets as well, yet we didn't see much of a positive move up in the equity markets. Chad said, I'm sounding more like you when I explain scenarios to people as far as trading versus investing in general, what I would do scenarios. I don't know if that's a good thing, Chad. Do you really want to sound like me when you're talking to people about trading? I don't know if that's a good thing. Yeah, you got to be yourself, bud. Just be yourself. That's what everyone my friends are telling me. Just be yourself. Oliver says, Visa beat. Yep, I think I had Visa on that list here on the earnings calendar here. Yeah, so Visa beat by just 12 cents, but we're down almost 3%. At least Visa, I think we're all fine with Visa. I don't think Visa's really going anywhere. But right now trading almost down near this lower end. And, from a supply-demand perspective, if you're looking at demand zones, you had a drop, a base, and a rally out between that zone of 334 to 339. And right now we are sitting just a hair above 339. Just at 339. Yeah, Rob, it is down 7.48%. And it was, if you look at the intraday chart of UNH, it really was not great. It just felt like it couldn't get its legs underneath it. It started to rally a little bit during the day. You can see early on it started to rally and then went sideways and then just kind of just slowly tapered off and ended near the session lows. That's really bad. Really bad. Sure, I'll check out SoFi. Oop, not CFI. How about SOFI, Merlin? Learn to type, son. Learn to type. Let me put that back onto a daily. There you go. So SoFi, that's a comment right there. We talk about shooting stars all the time. That thing was a monstrous day. It was huge up moves, but that's a shooting star. That's a pretty significant shooting star, and that leads me to believe more downside movement. And actually, it's already down 5.85, almost 6% in the after-hour session. So it was looking so great today. You talk about just a wild swing, right? If you go from yesterday's close, I think it's a red candle. Yesterday's close to its peak today, you're up 19.45% on SoFi. Right now, the closing price of yesterday was $21.02. Right now it's trading at $21.05. So it basically erased. It had a 19% move up and a 19% move down. Wow. Wild. Absolutely wild. That is a just crazy, crazy swing for SoFi, even though they beat earnings, right? They were supposed to come out at, call it 6 cents, came out at 8. That looks great, but markets are crazy, so I don't like trading earnings. Steve says, SoFi had $7, sold calls and lost it at 10. Makes me cry. Nah, it's okay. Hey, Steve, you bought it at 7. You lost it at 10. You made $3 on a $7 security, so you made, what, a 40-something% rate of return plus the premiums you collected? Oh, that's good, Big Eb. SoFi cry. Oh, man, the puns today. Look at you guys having fun out there. All right. So let me go back to our markets and work our way up to the top. Bitcoin, even though it was down today, I didn't like this one at all because MicroStrategy took a bit of a dump on here. I thought that MicroStrategy might actually hold up today. You know, Bitcoin has really done nothing for the past few weeks. It chops back and forth, but really kind of staying within that range, as you can see here. 118,295 is where the futures markets closed today, down 0.6%. I can say, as long as we stay above that 115,635 mark, I think it will be okay. It will be all right. We should be fine. And we'll see, because there's more and more Bitcoin treasuries every single day. Let's see, what else was there? I feel like, did I teach a class today? Oh, I did. BMNR. So someone asked me today in my session for Trading Academy, I taught the focus class today, and someone asked about this bad boy here. This was Bitmine, and first off, you shouldn't be trading stocks that look like this. You should just leave this stuff alone. Anything that goes from a price of $4.07 to a price of $161 in a period of 5 days, you should run away and leave it alone. Just leave it alone. Now, BMR, someone asked me the other day, what do they do? And, they do they do cooling of mining equipment for crypto. So you can overclock the computers, you bury them in these solutions that they have, and it allows them to run even faster because they cool off so quickly. They also are now starting a Bitcoin treasury and an Ethereum treasury, which Tom Lee is behind. And somebody today in my room was telling me how, Cathie Woods, sold a bunch of stuff and bought millions of dollars worth of this thing. Well, just because Cathie Woods buys something doesn't mean that you have to. Just because, if Warren Buffett jumped off the Golden Gate Bridge, would you do it? And we take it for granted that these experts are experts. They're fallible. They can make mistakes. And Cathie Wood has got a track record of making some pretty big mistakes. She takes some big shots. Why does Cathie Woods do so well overall? Number one, she's been buying Magnificent Seven stocks, right? So she's staying with the really big names that have done so well. Smart move. Number two, she's on CNBC and Fox and Bloomberg all the time pumping things that she's buying. So you're creating demand for a stock that you already own. So we have to take that with a grain of salt. Looking at this chart here, she's buying it. She's getting smoked right now. Absolutely smoked. Now, does it mean that this company is dead and garbage? No, not at all. But it was just $4 on June 27th. It was $161 by July 3rd. And here we are now on the 29th of July, and it's $32. So, to me, it feels like if you do want to jump on something like this because you feel that an Ethereum treasury and a Bitcoin treasury plus the mining aspect of it could be beneficial for Bitmine, great. I certainly would not put a lot of money in it, but I would wait for it to drop more. Yeah, Tom Lee. He is a nut. But Tom Lee is one of those people that just perpetually bullish on things, right? It's going up, going up, going. He's always bullish. Always. All right, let's move up our list here and go back to that. Russell 2000 down 0.69, but what happened here? We had just a slight close above that yellow box, came right back down, and now we're almost back in the middle of the range. So nothing there. S&P, this is that dark cloud cover. It's a reversal formation of a bullish trend. Really, to confirm this, you're waiting for a break below these lows. The low of today, you can kind of see that there's for the last 4 days, we've been sticking above 6,396 on the S&P. Once that breaks, I think you're going to see a fairly quick fall to 63.47. That'd be about a 50-point decline in the S&P. That would bring us down roughly 1%. So it would not surprise me at all to see within the next, either tomorrow or the next day, that will be down 1% and going back down to this little area where it had that kind of consolidation and then pop to the upside. For me, the real important number on this S&P chart is that it holds right around this 62.46. Because you notice after we break 62.46, there's really nothing. There is a rally-based rally that goes to 61.43. I'll just put simple horizontal lines there, not boxes. And that might start to become stair-stepping moves to the downside. Just be careful. I'd kind of be on a little bit of a defensive. I feel like the way the earnings went today, the way that the rhetoric is now heating up between Russia. If you saw Putin's comments, he says, these actions might be, pushing towards an act of war. I haven't asked Bill, but if he's available, he will definitely come on. No guarantees on that one. No guarantees on that one, but I will try my best to get Bill on the program for Friday. He's a busy man. He's teaching right now for some bank, so typical. All right, moving on up. This is the one I like the best. As I mentioned, I think this is a great shooting star on the NASDAQ. You've got with higher than average volume, which is great. Just slightly higher volume, which is fantastic. Keep your eye on this one. For those of you who want to, potentially be trading futures tomorrow from a short perspective, I think this could be very, very, very nice. And our podium, dollar index was up 25 basis points. Okay, we have done something interesting on the dollar. We did break that. I think that's green. I don't know what color this is. Let me see. What color is this thing? I can't tell color. I think that's green, the line I'm clicking on. That's 98.50. And that was the peak that we established back here on July 16th. We've now broken it. Now, it's spiked above it, but has not closed above it. This is the challenge. It has not closed above it. So a close above that 98.95 mark on the dollar index would lead me to believe that we're starting to see this trend change. And that may start to make me bullish on the dollar. Why? Because we made a higher low back here on July 24th. We made a higher low, and now we're starting to make a slightly higher high. So that is going to be something to keep an eye on as well over the next couple of weeks, is what happens with this dollar index. And don't worry, I will be showing you. It could be a dollar fake out, Chad. Will it close? Yeah, exactly. We're right there. It's like, oh, are we? I don't know. But it is of interest because how aggressively and how fast we move towards that 98.95 mark. After that, you're looking at about 99.41, and then it's a lot of upside potential for that dollar index. Oh, boy. All right, gold, meh, who cares? Nothing to talk about. Sideways, basing, meh. And then you have crude oil. So that little yellow box we were drawing on, I was talking about that one is kind of, it looks good as a buy point, but the more times it contacts it, the most likely that demand is being eroded and taken away. And lo and behold, we had a nice rip today. And I think it's really just Russia that's driving this one up. That the potential for conflict with Russia and the United States, it feels like it's growing. I don't want to see it, but unfortunately I have a feeling that might happen. Might be more intense conflict there. Okay, let's go into tomorrow's calendar and get you your earnings numbers for Wednesday. This is the big day. I mean, you finally have some popcorn trades of the week, which are exciting. These are the big names. You have a $3.8 trillion market cap company reporting earnings tomorrow, and that is the old Microsoft aftermarket. They're expected to make $3.35 per share. Then you have Meta also reporting aftermarket close. You've got Qualcomm. You've got ARM. So some really heavy hitters in the tech space. You also have UBS, Altria, Lam Research. But it's all about, in my opinion, Microsoft and Meta for tomorrow. That will be after market close. And just because I won't be here to show you, take a peek at what happens on Thursday. It gets even better. You've got Apple, Amazon, MasterCard, AbbVie, S&P Global, Unilever, Stryker, Kroger, KKR. A lot of good stuff happening. And now, on our economic calendar, though, you might think, okay, well, maybe things are calming down. No, man, I'm telling you this. I wish I was here tomorrow, because tomorrow is a huge day. I'll start with the U.S. You've got ADP non-farm employment change. You've got advanced GDP numbers, and that's expected to go from a negative 0.5% up to 2.5%. That's pretty big. You also have pending home sales for the U.S. You also have, of course, at 11 o'clock Pacific time, the FOMC meeting. Now, that will be exciting, but it's really about 30 minutes after that watching the FOMC press conference. So that should be a pretty exciting one. Then if you're trading the Canadian dollar, they also are coming out with a rate announcement, expected to stay at 2.75. So busy Wednesday. Oh, but wait, there's more. Let's go to Thursday. I just picked on Wednesday. Let's click on Thursday since I won't be here. So no shows Wednesday or Thursday, guys. Apologize, but I got work to do and a memorial. You can see we got the core PCE price index. That's your biggest, most important piece of inflationary measurement that the Fed is using. It's not wild right now, but certainly this could give you some potential direction. So just be careful here and just mind your P's and Q's as you guys are trading. So that will do that. Let me see real quick. You sound and look relaxed, very much yourself. But thank you, Luis. I will tell you what, man. There may be some bitter cynics in this room that feel like you don't have any problems or your background doesn't have any issues or your relationship is fine. I feel like I should do a public service announcement for therapy. And even if you don't necessarily need it, having someone to sit and talk to that understands how all of these pieces fit together, from whether it's relationship or love or emotions or attitude or anger or hostility, anxiety. Man, I've only done 2 sessions and I feel like it has saved me dramatically. As you guys know, this breakup I've been in has just been absolutely gut-wrenching. It's the most difficult thing I think I've ever done. Dealing with my mother dying was easier than losing this girlfriend. And the therapy has absolutely helped me. So yeah, I feel much better. I have a clear realization that the decision was the right thing to do, and I just need to put one foot in front of the other and move forward and find someone that's better for me, that fits me better, that is more into me, and someone I can grow with. So we're back on the market. We're trying to be positive and optimistic about things. Still miss her. She was an amazing person, but we got to keep on moving. Yeah, absolutely. Everyone go get it. If your health insurance covers therapy, do it. I think my copay is like $15 a month. If that's all you have to pay, or sorry, $15 a session. If all you have to pay is $15 a session, have a professional help fix the greatest computer of all, which is your brain, do it. Absolutely do it. Oh, thanks, Big Ab. Unfortunately, I don't play for that team, Big Ab, and you're married, so... Oh, yes. Thank you guys very much. And yes, I love you all. Thank you guys so much for the support through all of this. Not only just through all this, but you guys have been amazing for the 5 years I've been doing this show. It's crazy. I've done this show for 5 years now. It's officially over 5 years. And I did Power Trading Radio for 10. So that's 15 years I've been doing this type of stuff. So, you're in Arizona, Steve. I can always use a wingman. I have 0 game with the ladies. I have no game with the ladies, but we're going to work on that. We're going to go out and talk to some people and make some new friends and expand my friend circle. So that's my goal anyway. We'll see how it goes. We'll see how it progresses. I hope that in the next 6 months or a year, we're back on track and have someone that loves me and cares for me, and like we all want, right? Everyone here wants to be loved. Everyone wants someone to love them. So, all right, enough of that mushy garbage. Let's get back to the serious stuff. Yeah, Les, definitely today I feel like myself. I had a session today at noon and works wonders. It really helped me focus on what's important. I need to focus on myself. Power Trading Radio was live, PTR live. And it was funny with Margaret, with Power Trading Radio, I had a multi-million-dollar studio with full-on sound insulation. We had a control booth with a $50,000 computer that just ran the show, and I had a guy doing all the switching. If you look at what I'm doing for this show, I would contend it's actually relatively comparable to Power Trading Radio from a scene selection and switching thing. I just don't do as many like zoom ins and fade outs because I don't have an actual set. Back there was like a virtual desk. So it was very cool. I enjoyed it, but you look at the system I'm using here, just a couple $1,000s of lights and equipment and some nice cameras, and you can replicate all that. So yeah, it was like 15 years of live every day. Half hour to more. Steve says, I like this show better. You know why, Steve? Because I can be me. When I was doing Power Trading Radio, I was under the corporate umbrella of Online Trading Academy at the time, and there were certain things I could say, certain things I could not say. I had to have guests on, so Voldemort, when he would come on, he was the most pathetic guest ever. Like, pathetic. But I had to treat him with respect and dignity and edify him on that program of how good he was, because that's what I had to do under their umbrella. Now, I don't bring people on here that I don't trust. I like to think that if I bring someone on this program, I've vetted them to an extent, and certainly you got to be careful of whoever you follow or buy their signals or take their classes. You got to be careful with that. But yeah, Voldemort was the dumbest trader I've ever experienced in my life. The dumbest trader. The only question that he could answer was supply and demand. That's it. If I asked him anything, so what do you think about the trends going on with core PCE price index and the possible impact of inflation on the equity markets? Supply and demand. It's all he talked about. He knew nothing. Nothing. It shocks me that people think that Voldemort was a good trader. Crazy. And unfortunately, I think they took down all the videos. I would argue, go back and look, because you could hear me asking questions. You could hear him me asking questions, trying to prod him to talk about the market. If you really trade, bro, you should be able to answer any of these questions. Nothing. Hope he's not watching today. Oh, he's probably watching. No, that was Voldemort, Big Eb. He has got a little mousy little kind of voice. Yeah, Voldemort. He watches. I don't know if he watches, but his lawyers watch. His lawyers have actually contacted me and told me to stop saying certain things. And you know what? Kiss my backside. I will continue to say that he's not a trader. I will continue to say that I think he's a bad person. That's my personal opinion, is that guy is a bad, bad person. Oh, all right. Well, that's going to do it for me. Let's move on to better things. Let's go positive side of things. Anyway, that'll do it for me, guys. I won't be here tomorrow. I apologize profusely because I love Wednesday Fed days with you guys, but I will be back on Friday, full force, rejuvenated, and I think I'm going to be I'm feeling good. Hopefully this weekend will be a good time for me and closure on many different fronts for me. So thank you guys so much for your support. Hope you enjoyed. Hope you had some green trades today. Be ready for tomorrow. Jerome Powell obviously is going to throw a wrench in the works with whatever he says, but it does look like, I do believe you'll see a down day tomorrow in the equity markets. I don't think that they're going to cut rates, but we shall see. So thank you guys so much. Have a fantastic remainder of your day. I will see you guys on Friday. Take care, everyone.